Hi, welcome to Insights with Voight Real Estate. I'm Eric Northbrook. Today we have Josh Brant, Regional Director of Research, and we're going to talk about the numbers and get inside the numbers. We just finished up the fourth quarter and wanted to hear it straight from the horse's mouth on what's happening out there. So give us a wrap on kind of 2023 numbers and
Sure.
let's start with industrial.
Oh, I was going to say, do you want the bad news first or the good news? No, just kidding. Industrial, it was a year for the first time in about a decade with negative net absorption where the tenant footprint actually shrunk. So what we're seeing on the industrial side is it had been a few years of just red hot growth, and now it's moving kind of more towards the balanced direction. We had a lot of construction that started around 2016, and thus far, industrial has really kept up with that supply wave. But I think that it's highly concentrated currently in Otay Mesa. I think that you'll see the vacancy has come up for the first time in a few years, and that will probably continue next year with this ongoing construction.
Then how about retail?
Retail is interesting. Across the board, you can say industrial, office, retail, even multifamily. The transaction volumes were down, which is something we said last year, so it's kind of a continuing thing. But transaction volume was down, but retail is actually really stable. It's very stable. Last year, vacancy rate dipped under 4% for the first time since about 2017. In retail, yeah. And so it had spiked up following COVID, and then it kind of, it hasn't been a big story, but it quietly has stabilized. The big thing there is, for example, the supply and demand, of course, it always comes back to that. So in the last 6 years, there's been 2 million square feet of new retail construction, which is low by historical standards. But even though there's been a couple million square feet of new deliveries, we're still below the level of retail buildings that at that time. So there's all these properties getting scraped, basically. Down in Chula Vista, they just scraped the Sears a few months ago.
And so what are they going to do with that side? They take down the Sears and then...
That's going to be mixed use, but heavy on the residential side. Multifamily. So, and you saw one of our biggest, kind of classic malls in San Diego, Mission Valley, was just sold this year, and they're going to add a bunch of residential. They haven't mentioned it, but I'm sure they're probably going to also scale back on the amount of retail. So that's keeping the supply and demand balance stable. Unfortunately, it's hard to find the best properties. Without new construction, there's not a lot of availability.
Well, Josh, thank you for your time, and thank you for watching another edition of Insights with Voight Real Estate.